Hello, everyone. Welcome to another episode of In Conversation, my advisor coach. Today in conversation, our guest is Mr. Sirshendu Basu, Head of Products with Bandhan Mutual Fund. Sirshendu, welcome to In Conversation once again.
Thank you, Suren. It's lovely to be with you.
Always a pleasure. Always a pleasure. So, well, it's raining SIFs, as we say. Certainly. So I think SI is definitely a very, very interesting product proposition. But could you just highlight some of the, characteristics, differences which, SIFs bring, vis-a-vis a mutual fund or an AIF or a PMS? So what's the uniqueness about SIFs basically?
No, absolutely, Suren. SIF as a category has brought in a lot of novelty, a lot
Hmm.
of uniqueness from a product construction standpoint. The primary USP of an SIF is that in a traditional investment like a mutual fund, wherein we are used to one move in the market, which is the linear up move. Since you can only go long in a mutual fund, so therefore you benefit from the move in the market when it goes up. But in a period of volatility or during periods where market correct, which happens at every cycle, uh, there are not many levers to benefit from that.
Hmm.
And that's where SIF comes into being.
Hmm.
SIF, with its ability of going long as well as going short and bringing in various features of optionality and derivatives into it, can offer investors a very, very differentiated risk return scenarios, which actually makes an investor's portfolio far more robust, well grounded, and create a portfolio for all season.
Sure.
That's one of the thing. Now the second point is that you may say that, okay, long short I can do in AIF as well, right? However, in SIF, the two differences versus AIF is one, that the ticket size for SIF is 10
Hmm.
lakhs as opposed to 1 crore. If an investor doesn't want to commit that much in a first instance, therefore that becomes a challenge. And second is that for the same outcome, the incidence of taxation is very different in AIF as opposed to SIF. SIF being taxed in accordance with mutual fund offers a much better incidence of taxation, which makes the post-tax return for investors much better when compared with a similar long-short strategy in the AIF space. So
Sure.
therefore,
Sure.
these two things put together, SIF offers a unique set of product opportunities for today's investors.
Sure. Mhm. So in terms of Bandhan Mutual Fund, you have just recently launched on 5th of March your Arudha Long Short Equity Fund, Arudha Equity Long Short Fund, right? And closing on the 18th of March. Now, could you take our viewers, in detail as to what Arudha Equity Long Short Fund is all about? Number one, and number two, how did you arrive to this word Arudha, the brand Arudha?
Right. So I'll begin with the second question, which
Yeah.
is the genesis of Arudha. Now, as we mentioned, that SIF is a product category which helps a investor who's investing into a very standardized product in the form of mutual fund to avail more evolved products and graduate towards the alternate spectrum, right? So it is a product category which helps a investor to move toward more evolved products. Similarly, Arudha is a Sanskrit word
Hmm.
which means accent and progress. We believe that through the Arudha products under SIF, an investor would be able to progress from structured products in the mutual fund space to more evolved product in the AI space. And therefore, we feel that Arudha as a name very aptly depicts the strategies and the construct which SIF as a platform offers.
Sure, sure. Excellent. So it's a Sanskrit word, basically.
Yes, which means accent and progress.
Excellent. Very, very, very nice, warm thought, I must say. And if you could just take our viewers also through the Arudha Equity Long Short Fund in detail in terms of what this fund is about, what's the strategy, What's the fundamental in terms of the portfolio management? What kind of style it's going to be shaping up into?
Sure. In fact, Arudha Equity Long Short is a very simple fund, right? It endeavors to give a equity-like return with a much lower volatility. So, if I may break that further, what we are endeavoring out here to have a return which is similar in lines of Nifty 500
Hmm.
with a volatility which is significantly lower than Nifty 500.
Sure, sure,
So, therefore, that is the simple product endeavor for Arudha Equity Long Short.
sure.
Now, to achieve that, there are four levers which this product will be using. They are debt. The range of debt allocation in this strategy will be 0 to 20%.
Mhm.
And then it would be using equity long or long equity, which is the alpha generating vehicle in the strategy. It would be allocating in a range of 0 to 25% into equity short, which would aid the portfolio in reducing volatility and also generating return during periods of market correction. And the fourth lever is covered call, which
Hmm.
would help generate yield and is an return enhancer in the overall portfolio.
Sure,
So these four levers put together will will help us to achieve our desired endeavor of generating a return close to Nifty 500, around Nifty 500 for a wall which is significantly lower, maybe around 50% of the volatility of a Nifty 500.
sure. So the benchmark is Nifty 500 here.
Yes.
And so the equity will be more in a flexi style, large cap, mid cap, small cap, or are you looking at, putting some, structural caps, in the market caps or in any kind of pattern of sector, investing, etc.
So, as the benchmark is Nifty 500, so therefore it comprises of large cap, mid cap, and small cap.
Very true.
Akin to this, the equity long book, along with the equity short book, would have, companies in the space of large cap, mid cap, and small cap.
Hmm.
Having said that, basis the, portfolio construct which we have made and tested this portfolio over a 10-year period, suggests that generally about 60% of the equity allocation, 60 to 65% of the equity allocation would be into large cap,
Sure.
the balance being into mid and small cap part of the market.
Sure, sure. I understand. And in a normal market situation, in a straight market, market situation, any particular, strategy on the, the hedging of the portfolio? Is it like, okay, in the normal market, situation, I need to have so much of portfolio hedged and stressful. Of course, the maximum is 25, but any such strategies in place as well?
See, as we all are aware of the fact that the return in a portfolio comes from allocation and selection, right?
Hmm, hmm.
Here, with these four levers, we would be looking at allocating appropriately during the market scenario. To cite an example, in situations such as what we are witnessing now of
Hmm.
heightened volatility and correction, the allocation will be more towards, debt, short equity, and covered calls over there.
Covered calls,
The
sure.
relative allocation towards equity would be a tag lower, and the net
Hmm.
equity would also be lower because net is equal to long equity minus short equity.
Sure.
Conversely, in a situation where the market is bullish, in that case, the equity long would have a higher allocation, and debt as well as short equity would have a moderated allocation, and covered call would have a more reasonable allocation as well.
Sure.
Finally, during sideways, because sideways a very important period as well in the market,
Absolutely. Yeah,
it
yeah.
would be a very, very calibrated allocation across all
Hmm.
these.
Sure, sure.
Having said that, as I mentioned, that allocation forms a very important part of the return. This allocation also has a mathematical deduction.
Hmm.
Site, we begin the step of portfolio creation by looking at allocating between debt and equity. That is done by the model which we have and which we use in our balance advantage fund by
Mm-hmm.
looking at parameters and metrics such as market valuation, current and forward valuation, economic metrics such as the currency, the economic situation, and volatility parameters. Basis which the model throws a number, and that helps decide on the allocation towards debt and equity. After that, the equity allocation gets bifurcated further into long equity and short equity, again based on opportunity which are there in the short, and in accordance to that, the allocation also happens.
Sure.
Finally, depending upon the opportunity available in the derivative segment, in the long book, covered calls are written. One of the big benefit which SI brings in is that as opposed to a covered call writing in a mutual fund where you can write covered calls only in Nifty 50 and Sensex 30 stocks, here you can write calls in all the 208 FNO stocks. So therefore you have a broader spectrum,
Mm-hmm.
and that may lead to a higher allocation of writing covered calls over there.
Sure.
This is how we intend to create the portfolio in the strategy.
Sure. So how many stocks, let's say on an average, Sirshendu will this portfolio be holding?
The equity portfolio would be
The long
looking at
only.
a 30 to 40 stock portfolio. The equity allocation we're looking at a 30 to 40 stock portfolio out there. And the short would be about 5 to 10 stocks out there,
Hmm.
right? We are keeping certain risk metrics in place. To cite an example, the maximum weight of any single stock for going short would be 1% of the portfolio. Let's assume our allocation to short is max, which is 25%, and I
Right.
get only 10 stocks, right? So my total allocation, which is 1% each, is equal to 10%. The balance 15% would be through Nifty futures
Sure.
segment, right? So
Sure.
that's how the allocation would come in.
Understood.
In case of selection, we would look at alpha both in the short side as well as on the long side by purely looking at, let's say, in case of a short, the bad guys to be kind of sold off, and in case of a long book, the good guys to be bought with the view of selling them at a higher price.
Sure, sure. Coming to option writing, covered call, positions, etc. Now, option writing, of course, generates a premium, but there's a but to it in a way, right? So, what is your thought? Of course, like you did mention, you will be taking covered call positions, but and they're extremely important at a market when the market's not going any direction. That's a time when they matter a lot. So, what do you believe that is it a good strategy to get into? Because what are the chances of getting options writing correct through the premiums?
Absolutely. So first of all, we are doing a covered call, right? And therefore, there would be an underlying stock in our long
Of
book, and
course, yes.
we are very clear that the core objective of a long position is to generate alpha. We're not
Mm-hmm.
looking at it like, okay, I can also make covered call. Covered call writing is completely incidental to the core objective of long equity.
Mm-hmm.
Coming into covered call, our endeavor would be to write covered calls in a little out of the money calls, which we'll be writing. Let me give you an example. The current market price of a stock is 100 rupees, and it is we have bought in our long book for 100
Mm.
rupees, and we expect that to grow significantly over multiple years.
Sure.
In the options market, the current month option will be looked at, and we also know in a month the stock moves by max of 3 to 4%, which means
Mm-hmm.
it can go up to 103 and 104.
Mm-hmm.
There is a option which is available with a strike of 105, which is trading at 4 rupees, and there is another one available at 110 strike, which is trading at 3 rupees.
Mm.
We would prefer the little out of the money, which is the 110 strike price, uh, albeit we'll be getting a lower premium, but my knockout happens in that at 113 rupees.
Correct. So basically, you'll choose a higher strike price, is what you're
So
saying.
that my probability of getting knocked out
Correct.
is less. Yes.
Sure, sure, sure. Understood, understood. Yeah. And will you be actively increasing and reducing your net equity exposure based on market situations and as in they develop in terms of, or how will that play out?
Our entire process of allocation as well as selection, or rather, the first to begin with allocation, would
Hmm.
be done on a monthly basis. And that would take into account the market situation. And in accordance to it, all the allocation to the four levers would be determined and executed.
Sure.
That is how we would be managing it quite actively to ensure that we are in sync with the market.
Sure. So, Shindu, for the convenience of everybody, could you just highlight also some of the, the taxation, for the SIFs? Because, a lot of viewers are listening to you and they would love to learn this through you as well.
So, since this strategy would have equity in excess of 65%, the taxation in this case is akin to an equity taxation, which would be 20% in case of less than 12 months and 12.5% if held for more than 1 year.
Sure, sure. So just like the equity mutual funds, etc.
You're correct. You're correct.
Brilliant, brilliant. So that makes it very convenient for someone to participate in this kind of a product proposition.
Absolutely.
Yeah. And Bandhan Mutual Fund is already running one product on the SIF, right?
Yes,
Which
we began our SIF aspiration by launching the Aruda hybrid long short strategy,
right, right.
which is a strategy which invests about 60% into high quality debt and 40% into arbitrage. Therefore, it is a quite a conservative product looking at, let's say, the arbitrage, the low duration, the ultra short, going up to the term deposit categories as well. One of the unique things of the product is that in that case, if it is held for more than 12 months, the incidence of taxation is 12.5%.
Oh,
And if it is, held for less than 12 months, it is at the tax slab of the investor. So
sure.
having a complete debt like product with a favorable taxation offers an opportunity of 60 to 80 basis point more return than a corporate
Hmm,
bond index or an
hmm.
arbitrage fund if held for more than 1 year.
Sure, sure. One question which comes to our mind that since this is your second SIF fund, which you launched as a house, where do you see the education level for the distributors at this point of time? In terms of because ultimately, being a B2B to C, it has to be suggested by the mutual fund distributors and the other forms and parts of the distribution support system. So, where do you see how the level of education is there? Number one, that's my question one. Two, what is Bandhan Mutual Fund doing as an initiative to, upbring that education level for SIFs?
So as we are all aware of, there is a prescriptive certification which is required, a certification which is mandatory
Hmm.
for selling or distributing SIF.
True, true.
And that examination the partners need to take. And since it has come into being recently, so we have a few partners who have already cleared
Hmm.
that and are certified for distributing SIF. As we progress, there would be more and more partners who would be joining, the league over there by clearing the examination.
Sure,
So
sure.
this is the journey which is there even for mutual fund distribution as well. And similarly for SIF as well. Since SIF are little evolved product, has usage of derivative, it is therefore to a great extent relevant to understand before distributing and recommending it to investor. And maybe that is the thought process which the regulator had
Hmm.
in suggesting a curriculum for getting the certification for
True,
SIF.
true, true.
We are doing the training sessions with our partners to help them understand the course better, and therefore as much possible to guide them to clear the examination and enrich themselves with the knowledge.
Wonderful. And what has been your observation? Where are they, in a sense, like how well are they coping up to this new fund? Because it has definitely a lot of intricacies and a lot of complexities.
You're talking about a new fund or the SIP as a
SIF
category?
as a category.
So everybody is very interested because it brings in a lot of interesting things. Just
Hmm.
look at a thing now. If you're talking about a fund which is ours, which is talking a Nifty 500 return, which is in a 10-year CAGR, has given a return of around
Mm.
14%, with a volatility which is like, say, 8%. That's the simulated scenario for our strategy. That kind of a product, if one can offer to an investor, helps an investor immensely. So therefore there were a lot of interesting product opportunities which a distributor can talk to
Mm.
their investors and can help an investor to create a more robust portfolio. So we
Yes.
are super delighted to
Mm.
you know have that opportunity to explore that opportunity. So therefore they
Mm.
are very, very keen and upbeat about this whole opportunity which has come to all of us.
Excellent. Excellent. Now, one question is that all is good. Great fund, great category, SIF, great. But do you believe that what kind of excess alpha could probably an equity long short? I'm not talking about Arudha. I'm saying generally would vis-a-vis end up giving higher than a regular flexi cap sort of a fund.
See, again, it would depend on the strategy one chooses. One can have usage of derivatives to
Mm.
be aggressive. I would like to state what we are trying to do out here. We ran the strategy which I just alluded to you about, the four levers of debt, equity long, equity short, and covered call over a period of 10 years to see how it can work. On a 10-year CAGR basis, this strategy, when compared to Nifty 500, has actually outperformed. To give an
Okay.
example, Nifty 500 in the 10-year has given a return of 13%. This
Mm-hmm.
strategy, based on historical precedents, has been able to give a return of 14%.
Mm-hmm.
But the true fun begins with the volatility. Nifty
Mm.
500 gave a 13% return with a 16% volatility. This
Mm-hmm.
strategy shows a return of 14% with 8% volatility.
I think that's the difference.
Significant difference, significant
That's
difference.
the
Now,
that's
what
the
does it
piece. Yeah.
what does it entail and what does it do? Now, therefore, we feel that this particular product is extremely relevant for investors who are looking at equity hybrids, which is balance advantage, aggressive hybrid, large cap, multi cap.
True.
This entire spectrum can be catered through this. You may say that why large cap? Because your strategy has mid cap and small cap as well.
Mm-hmm.
Now, what we have observed is that when an investor says that we want to invest into large cap, what they actually mean is that give me a strategy which has equity like return, but within the equity space, low volatility.
Mm-hmm.
And we are attacking the volatility option.
Absolutely. I think this is the point which is addressing very well as well.
So with the volatility, which is, let's say, Nifty 50 wall is around, volatility of standard deviation is 12%, and this
Mm.
product at 8%,
Mm.
giving a return which is like a Nifty 500,
Mm.
is what we feel that should resonate with investors who are looking at the broader spectrum of equity hybrid, large cap, and even multi cap for that matter. Because of this fund can offer or will be offering mid and small cap in their portfolio as well.
Sure.
And hence it becomes a center of plate or core allocation in an investor's portfolio as well.
Mm.
And therefore the allocation in this kind of strategy can be higher because of these characteristics of return akin to a, let's say, 500, which is a diversified index, but almost half of that of volatility.
Sure, sure. No, this is a very good point which you mentioned on the volatility part, specifically in the down market side. Of course, and that's what something which really is very very important to manage the investor's investment behavior. Because that's the time when he gets itchy to have a flight out. So this kind of takes
Absolutely.
care of that part very well. So, Shishendu, today through this conversation, what message would you like to give to all the partners, investors listening to you for SIF and of course for your new fund offer?
So first of all, SIF is a very, very interesting and exciting category, which offers us manufacturers as well as our partners to take to investors a very unique set of products which can offer very good risk adjusted return to investors. From a point of Arudha equity long short, we believe that this is a very, very interesting strategy which targets to give a return like Nifty 500 with a volatility which is much lower, and thereby catering to investors who are looking at a, aggressive hybrid, balance advantage, large cap and multi cap out there. Use of derivative and use of the levers, the unique levers which SIF offers to moderate volatility is the key clincher out here. Also, we do have the talent which kind of is required for managing this. We have a fund manager, Nilesh Shah, who has an experience of managing long short for 8-9 years. That experience and expertise is there, and through which we are able to launch this fund for our investors. We are
Sure.
very, very happy and delighted to bring this as our first equity, offering under the SIF umbrella, and we hope to, add value to investors' portfolio through this strategy.
Absolutely. Wonderful. So, well, for our viewers, this is Mr. Sirshendu Basu, Head of Products with Bandhan Mutual Fund. He, of course, happens to be a very, very close and a dear friend for many, many years as well. So, Sirshendu, thank you very much for taking out time today and taking, our viewers in terms of what Arudha Equity Long Short Fund is all about. And the NFO ends on the 18th of March. Which was launched on 5th of March, closing on the 18th of March. So, and of course, the nuts and bolts of SIF, specifically the taxation part, and in terms of how the option premium writing, and of course, also on the covered positions, etc., will work out. Because I think SIF is something which will definitely catch a lot of pace as more and more, distribution partners learn about it, qualify the gate for them to start suggesting this fund as well. So thank you very much, and wishing you the very, very best for your new fund offer of Arudha Equity Long Short Fund.
Thank you so much, Suren. It was great to be with you today.
Always a pleasure having you, Sirshendu. And well, for our viewers, I think all of you should definitely look at SIFs, as the level up next from the mutual funds. It's definitely an interesting proposition, and obviously, go through in details what SIFs are all about, and do put your comments about the SIFs. What you believe this as a part of client's portfolio. And second is, I'm requesting that if some of our viewers have not subscribed to the Advisor Coach YouTube channel, it's very simple. Just press that subscription button. It helps us in coming to you, letting you know as and when we come out with these wonderful video interviews, video podcasts with gems like these. So thank you. Thank you very much, Sirshendu, for joining in.
Thank you so much.
Thank you.